Good, whatever it is, morning, afternoon, night. This is David Roche. This is Quantum Strategy, and this is the mini podcast on macro matters. Well, the last week has been characterized by the end of the European alliance, the transatlantic alliance, which is now pretty well accepted by everybody that for reasons which I cannot even explain to myself, the Trump and the Trump negotiators have handed a victory to Putin without even starting negotiations. The result of that will be that Putin will be reinforced in his ideas. He will do a pseudo standstill on the war while he rebuilds his army, which will take approximately 2 years or 18 months, actually, if you look at what has to be replaced. And he will then invade Europe again, either in Ukraine, easy to kind of fix up an incident that he could go and fix with his army, or in the Balkan states or in the southern Caucasus. Okay, so I think the outlook is particularly grim. And the rhetoric which has been used and the stance of the US has actually indicated that this is irreversible. And this morning, the new Chancellor-to-be of Germany, Merz, declared the transatlantic alliance to be dead, and he is looking for a huge boost in European defense expenditure. Let's do our own thing, as well as extending the French and UK nuclear umbrella to cover the whole of Europe on the same basis as the NATO Clause 5 treaty does. The NATO Clause 5 treaty says that an attack on one is an attack on all. Nobody believes that the US would honor this anymore, and therefore it is necessary for Europe to set up its own nuclear deterrent. Anyway, I won't bore you anymore with that, but the costs of this are immense in terms of arms expenditure. I estimate that Europe will have to spend approximately 150 billion euros per year, all the years, on top of the 300 billion that is already being spent in order to rearm itself. And that it will go beyond that because the military industrial complex in Europe is really not up to scratch. And in order to have strategic autonomy, i.e. use your own rogue weapons, where US weapons might have a kill switch, which they would pull if they didn't agree with your war aim or the war you were undertaking. So this is a vast shift towards the militarization of Europe. And of course, I'm not going to recommend any stocks, but if you look carefully at your indices around Europe, we have been recommending big increases in defense expenditure throughout the area for a long time, as the breakup of the liberal world order is a well-heralded event and has been in our research for over a year and a half. Okay, and let's move on to the data. Number one, we had the US data last week, which showed a significant hike in inflation expectations to 3.5%, and the fear at the same time of consumer confidence, which dropped and now looks less confident than before. I've been asked if I think this is the effect of tariffs and of the present administration's policies, which kind of rip up the global supply chains and replace it with more expensive alternatives. And it is hard to say because the big disruptive increases in tariffs have not yet occurred, but they will occur and they'll be rolled out after April the 1st, if not before. And between now and then, the rhetoric will go on piling up the fear and the damage. So I would say that further interest rate cuts by the Fed are completely out of the question. With inflation expectations of 3.5%, you must be joking. I personally think Fed cuts are over, that the economy in the US remains strong for the moment, but it is probably going to have a lot of problems by the second half of this year, but remains strong at the moment. That therefore the neutral interest rate, that famous R asterisk, which is the interest rate R star, some people say, after the stars and stripes, that rate of interest is probably around 4%, and there's very little need to cut interest rates further without risking further bubbles, and there are plenty around there, including the S&P 500. And you can have asset bubbles like in private equity, which is an asset bubble, and so on. So my view is no further interest rate cuts, and that this deterioration in sentiment and expectations, which we saw last week, is not the result of tariffs. It is the result of fear of tariffs and all that that implies. And I would say that it might go away momentarily, but it is the driving force, I think, it is the driving force of the end of exceptionalism. Exceptionalism had two legs. One is that everybody accepted without question that the only place to put your money was in the US. That brought over $18 trillion, so 10 times the Chinese holdings of US treasuries into the US over the last 10 years, and it was all to buy equities. It was not to buy bonds. And if you start to lose that motor and the money starts to exit, then down goes the dollar and down goes the stock market, and the exceptionist dream is over. I don't know if this is the moment, but I think it is what will happen during 2025. So you might like to know that, and then you can all write and tell me that I'm prejudiced and a Trump hater and everything else. I'm not. I look at people with the cold eyes of life and death, and then pass by. As WBA said on his tombstone, or rather, they said he said it for his tombstone, and that's my view. Now, going on, we've had some information which is important and will stretch out. The German election, it's not quite as good as I thought it would be, because the CDU-CSU didn't win by as much. The SDP underperformed dramatically, which one would expect, but it's likely we'll have a grand coalition, CDU-CSU. The Liberals, the AfD, didn't make it by the look of it, which is a pity because it would have been a perfect coalition partner for those two major parties. And I don't think they will be able to get into a coalition agreement with the Greens, who did pretty well at 11.6% of the vote, because the Greens disagree with them about, and can quite wrongly disagree with them, with the CDU, CSU, and the SPD. They disagree with them about starting nuclear plants and whether petrol burning engines should be phased out in cars, automobiles, for you on the other side of the Atlantic, by 2035. But it is possible that the Greens would coordinate with the three parties in the Grand Coalition in order to get the debt brake lifted. Now, the debt brake needs a 2/3 majority in the Bundestag to lift. If the three parties were, let's say the four parties, including the Greens, were to vote on that issue alone, they would be very close to getting that majority. They'd need maybe 10 other votes from here and there, including the independents. Not impossible. That would be the fast way to reform. But I am now saying that's going to be very difficult. Although the Greens will vote with the government on specific issues, I doubt that they will go into the coalition, which is, of course, a binding agreement in Germany, not like in Italy or UK, where people walk in and out of coalitions like they were going in and out of the dunny, to use Australian, to show that I'm international. Now, okay, so we're not going to get quite the composition of the government that we need. But put it this way, it's like you turn up at the airport and sorry, you're not getting your first class seat, you're only getting an economy seat, but you're going to go to the right destination, which is a nice place. We're in the economy. It's a more cramped ride. It's harder to get to the loo and all sorts of things like that. And we're grumpy, but we're going to get there. And I think that's what the German coalition tells us. Now, interestingly, what do they have to do? Well, they have to start the nuclear plants because Germany needs cheap power. And at the moment, what they're doing is buying nuclear generated electricity from France because they have principles against having their own nuclear reactors, which is a load of twaddle. So, I mean, they need the cheap power. That's one bedrock of reform. They also need to plow a lot of capital into infrastructures, digital infrastructure and physical infrastructure like railways in Germany. And third of all, they need to do something very dramatic, we all do in Europe, about defense. And I think a lot of that money will come from the European Union at the European Union level, financed by jointly EU member bonds, for which the EU is on the hook. And that will get, of course, a lower credit cost and a better credit rating. And then that will be given as grants to the Germans and others, in order that those grants then don't count as debt, so that you can get around the debt brake without actually having an act of parliament for that particular topic, which is defense. For that particular post, you can get around it. And I think that's what's going to be done. So that's good. Okay, so basically Germany is a buy, not the long bonds, because there'll be more bond issuance one way or the other. But for the equities, and particularly for the defense sector, which I will not name the individual stocks because I'm not allowed to. Moving on, we had the IFO index this morning, which was flat, which means they're living in another world. It's a pre-election result. And it doesn't seem to me that the world is flat. Actually, short term, I think the world is going to get considerably worse as the United States abandons the Ukraine while trying to grab its minerals, like in an old time Gabriel Marquez novel in Latin America, Cowboys in Town, and hopefully they won't get them. And coming up this week, well, let's have a look. The most key events this week are going to be Trump rhetoric. If they make things worse, not only on the international transatlantic trajectory or bridge, that's falling down anyway. And anybody who thinks it's not is, I'm very sorry to tell you, in my view, humble though it may be, you're just wrong. I think the Trump rhetoric may come up in, number one, the terms of negotiation with Ukraine, where it seems to be that these people are intent on going back to 2022 because the Russians said they should, which was basically when the Russians put forward a peace proposal, which resulted in the abject surrender of Ukraine, denazification, amputation of territory, no armies, no joining NATO, et cetera, which would have abolished the existence of Ukraine as a nation state. Now, it appears this has been accepted by the US, and if it has, then it's disastrous. So that could get worse. It also could get worse as a kind of quasi disruption. Well, it's not quasi disruption, it's total disruption, but whether the quasi nonsensical disruption, let me say, of people like Elon Musk telling people to answer his emails by dusk or they're considered to be fired in huge bureaucracies which are necessary to run America. If you get a lot more of that, then I'm afraid the Americans have probably reached a tipping point where they don't like it very much. Too much disruption, too much instability is probably not what they thought they were really going to get. Well, they voted for it, now they got it. Okay, German coalition talks, that's going to be very important coming up. Who are going to be involved in the German coalition talks? We know, of course, there's not going to be the AfD because, I mean, they're a bunch of fascists. But unfortunately, if we don't deal with the economic problems of their supporters, it'll simply grow. And you cannot keep them out of power with a firewall forever, unpleasant as they may be and unpalatable. You can't keep them out of power forever if they keep getting more popular. By the time the next election is held in 4 years, they'll be back. And they could well be at a level of votes where you couldn't ignore them anymore. I hope that doesn't happen, but that really now depends on the German coalition getting the German economy moving. Okay, now the other things on in the geopolitical sphere this week is President Macron and Prime Minister Keith Starmer are going to America to change Trump's mind. I think that'll be a bit of a damn squib, frankly. And I think when they come home, there will be another probable brick knocked off the top of the wall of the transatlantic alliance. But let's see where they go. That's going to be very important. And then, of course, we do have economies to worry about and what's going to happen. We have umpteen speeches by Federal Reserve officials. All of them are going to say no further interest rate cuts for the moment. Some will say, oh, they'll come later. And some will say they'll never come at all. But basically, don't hold too much hope. We have the economic data, including personal income and spending, PCE prices, durable goods, and that exciting revision, the second estimate of Q4 GDP, which is going to keep me on tenterhooks every evening until it comes. More important, conference board consumer sentiment, see if it confirms what we had last year. That's important. And then the housing prices, S&P Case-Shiller home price data, as well as pending home sales, to see if it is confirmed that the housing market continues to decline in the United States. And probably bigger than any of this is NVIDIA. We're going to get its results. Has it already been hit by the deep disruption? I think probably not. But the problem about Nvidia is it's got such a huge, a high goal to meet every quarter that even a little miss will be a big thing. So watch that one in a bit. Now, in Australia, we are also going to have inflation figures and the Tokyo metropolitan area, but otherwise pretty quiet, really. Some economic growth figures out of India. And Korea's central bank is having a big meeting to cut its interest rates by a quarter point. The economy is really not doing well, and we're going to see declines in exports as world trade goes down after Trump's tariffs get normalized, or not normalized, exceptionalized. Sorry. The main thing that's exceptional about America at the moment is its tariffs. Okay, then Europe will trot along. France, inflation. France, Italy, Germany, Spain, and not in Europe as far as I know, but nevertheless included in its figures for some reason or another, is South Africa inflation. And we'll have GDP growth rates from Switzerland, just about in Europe, but pretends it's not, Turkey, which is not, and Brazil, which is not, and Canada, which might join. So that leaves us with the IFO business climate. I've just talked to you about flat, a non-event. Germany reports this fourth quarter GDP. We see where that goes. And we have the famous G20 finance ministers and central bank governors who are meeting this week, but the US Treasury Secretary is not going. He prefers to write op-eds in the Financial Times explaining why they're making a grab for Ukraine's mineral resources and explaining why this is not neocolonialism. It's just paying themselves back as if they were actually giving a client the bill for their meal in a restaurant. Now, I think there's also a G7 meeting today, and the question remains whether the US refuses to sign the usual end of meeting G7 meeting declaration, which acknowledges that Russia invaded Ukraine 3 years ago today and is completely in the wrong and is a criminal terrorist state. Now, of course, the declaration to be signed does not quite say that, but it does repeat the language that was used in the previous 3 G7 meetings. But the US doesn't want to sign it because now they think that Ukraine started the war. And on that happy note of the interpretation of history on the fly, I shall end my little contribution to thinking about the unthinkable. Have a good week if you can.